Market sentiment started to rise before the White House report was released. Institutions bought stocks, whales sold, and miners followed suit. 2.18 billion bitcoins withstand the selling pressure of 80,000 bitcoins? USDT is under pressure from USDC to maintain its position. Genius has been launched. Who will reap the benefits of compliance? Does the UK also want to learn from Germany and sell its currency to recover losses? These days, not only the leaks are cutting their losses, but the government is also cutting its losses harshly. Bitcoin is going viral. Is this the halftime of the bull market or the final whistle? Trends.fun suddenly became popular. What is Solana up to now?
July 21st, Monday. BitcoinTV English channel. Where is the coin chain? I am Michael. Let's start with the 24-hour data headlines of the currency circle. Recently, the US Bitcoin Spot ETF has seen strong net inflows. From July 15th to 18th, a total of $2.18 billion was attracted, setting a new record for weekly inflows in 2025. Bitcoin was directly pushed to the $120,000 mark, and the entire market instantly recovered sentiment. The most powerful one was BlackRock's IBIT, which attracted $497 million on July 18 alone. GBTC outflows were 81.3 million. Although it is still bleeding, the flaws do not outweigh the merits. Some newly launched ETFs, little brothers like BTCW and HODL, have also started to earn money every day, indicating that institutions are really starting to buy seriously. However, the bigger highlight is still to come. On July 22nd, the White House will release the first encryption policy report in history. It is said that it is written based on Executive Order Number 14,178 signed by the President. It is expected to talk about digital asset supervision, innovation encouragement, national strategy, etc. It is simply a signal flare for the entry of the national team. At present, Bitcoin is in a double buff state of favorable policies and hot money entering the market. But it should be noted that if the policy content is not as sweet as everyone expects, the market may also have a short-term retracement. Don't forget, the more violent the rise, the more violent the volatility. Bitcoin has risen to a high level, but the exchange is suddenly full of goods. On-chain data shows that on July 21st, the exchange's Bitcoin reserves reached 2.429 million, a new high in the past month. What does it mean? Someone is sending coins to the exchange, usually in preparation for selling. On July 15th, the inflow of Bitcoin alone exploded to 81,000, the largest since February. And it's not just small coins. The number of large whale transfers of more than 100 Bitcoins directly increased from 13,000 to 58,000. Miners are not idle either, spitting out 16,000 Bitcoins a day, all sent to the exchange, obviously to cash out at a high price. Ethereum is similar. On July 16th, 2 million ETH were poured in a day, and the whole market had a bit of cash-out mood. But then again, this phenomenon has been seen before, smashing the plate at a high level, washing the chips, and then continuing to rise. As long as there is no negative impact on the overall environment, this small correction may be the next opportunity to buy at a low price. The NFT pot has finally started to smoke again. Last week, the total transaction volume of the NFT market reached $143 million, setting a new high for the year. Who is leading this wave? It is still the big brother Ethereum, which soared 300% in a week, and the transaction volume soared to $75 million. It was still deserted 2 weeks ago, but it suddenly became hot as a furnace this week. One of the reasons is that a whale spent a lot of money to buy 45 CryptoPunks, which directly ignited market sentiment. Bitcoin is not to be outdone, and the NFT transaction volume has increased by more than 130% from 11 million to 25.6 million. In contrast, Polygon's performance is a bit socially phobic and has not kept up with the pace, indicating that funds now prefer blue-chip chains. The price of Ethereum has soared by nearly 50% since the beginning of July, which not only drives NFT pricing but also pulls up liquidity. Don't forget, historical experience tells us that once Ethereum rises, NFT loves to jump. Although the entire NFT market is considered rotten in 2024, this rebound may be the first thunder to break the cold winter. Please like and follow us to sort out the latest developments in the currency circle, chain circle, and mining circle within 24 hours. Click the small bell to join the channel and become a member. You can receive the Member Wealth password from Monday to Friday. Last weekend, US President Trump officially signed the Genius Act, and the first special law on stablecoins in US history was officially released. Although it will not be officially launched until November 2026, the whole circle is now in an uproar. Wall Street is analyzing, Silicon Valley is betting, and even members of Congress are arguing. Some people say that this is the secret weapon for the US dollar to enter the crypto world, while others directly pour cold water on it, saying that this thing is actually a wallet remote control in the hands of the government, which can turn off the stablecoin you use at any time with one click. On the other hand, large institutions have already started working, grabbing licenses, finding lawyers, and running procedures, all with one goal in mind. Once the policy is implemented, they must go online first and grab money first. And opposition figures like Congresswoman Marjorie Taylor Greene directly shouted, "The Genius Act is essentially helping the government to make a backdoor." As the biggest variable in the current market, the response strategies of USDT and USDC will become the core clue for observing the impact of policy implementation.
This afternoon, we take a giant step to cement the American dominance of global finance and crypto technology as we sign the landmark Genius Act into law. So congratulations to everybody. This is a big deal.
Facing the implementation of the Genius Act, the world's two largest stablecoin issuers, Tether and Circle, expressed their respective positions. Tether CEO Paul Ardoino said that he would ensure that USDT fully complies with the compliance requirements of the Act for foreign stablecoin issuers to safeguard its legal trading status in the U.S. market. Circle CEO Jeremy Allaire emphasized that the Genius Act will further strengthen Circle's long-term advantages in compliance.
Y ahora mismo en el entorno Estados Unidos, en el entorno latinoamericano en El Salvador, y luego, considerando que el crecimiento del mercado asiático va a ser brutal, hace que Tether se siga consolidando como la principal stablecoin, yo creo que en este punto creo que Tether ganará la batalla.
Whether you stand for Tether or Circle, the stablecoin war triggered by the Genius Act has already begun. On one side is Tether, the dominant player that started with market share and is in a hurry to make up for its compliance work. On the other side is Circle, which has lined up early, waiting for the regulatory whistle to start. From Wall Street to Silicon Valley, from Capitol Hill to Latin America, everyone is betting who will survive to the end. But don't forget that the real test of this war has not yet come. In November 2026, when the policy is officially implemented, it will be the moment when the winner is revealed. At that time, whether Tether will continue to lead under regulatory pressure or Circle will take advantage of the opportunity to overtake, no one dares to make a conclusion now. This time, stablecoins are not just substitutes for the US dollar, they are becoming part of the global financial power structure. How many countries will legislate, how many issuers will reshuffle, and how many on-chain assets will be targeted, we can only wait and see. The German government was eager to clear its stock, and now the UK has also joined the national currency selling army. Bitcoin has become a new fiscal cash machine. In January this year, the German government seized 50,000 bitcoins from the pirated platform Movie2K. From mid-June, this batch of bitcoins began to be sold one after another, and the stock was cleared in mid-July. The average selling price was only $57,900, and the total exchange was less than $2.9 billion. If Germany still holds this batch of coins now, the value has already exceeded this $5 billion. That is, they directly sold away nearly $3 billion. This is not only a missed opportunity, but also a textbook low-point clearance. The UK has also recently announced the auction of Bitcoin for saving the market, which makes people wonder whether they are in financial difficulties or have misjudged the market. Germany has just sold away. Will the UK follow suit?
The UK Home Office is working with the police to liquidate about 61,000 bitcoins, with a total value of about $7.2 billion, hoping to restore the Treasury when the finances are tight. This batch of bitcoins was only worth $1.7 billion when it was seized, but now it is close to one-fifth of the UK's total annual infrastructure investment. However, to realize it, three difficulties must be overcome. First, legal compliance is still controversial. Second, there is a lack of official wallets that can safely receive it technically. Third, a one-time sell-off or crash may not sell at the book price.
If the UK really clears out this batch of Bitcoin, will the market repeat Germany's dumping, digesting, and pull-up script at the time? Although Germany's cut-meat-style liquidation once caused panic, the price of Bitcoin eventually reversed and rose. If the UK can adopt measures such as phased release and institutional directional bidding, it may attract the attention of mainstream funds while controlling risks, and even become an effective national-level crypto asset auction paradigm. More importantly, this is not only a fundraising behavior, but also reveals a structural trend. Bitcoin is transitioning from market assets to national assets and becoming part of the sovereign fiscal structure. In the future, global sovereign assets may present a ternary structure of foreign exchange plus gold plus digital assets, and the UK's move may only be the beginning. For traders, although there may be fluctuations in the short term, as long as there is no panic dumping, the market is expected to quickly absorb such selling pressure, and the long-term benefits are far greater than short-term disturbances.
Bears say run, bulls say the market has not peaked yet. Will FOMO hit you back? Trends.fun can be used as a track by copying and pasting, but I wonder if there are any side effects?
This year's crypto market has been a mess of arguments between longs and shorts. Shorts slammed the table and said, "It's the top, run away." Bulls were even louder, saying that the bull market has just warmed up, why run away? Can you get a result by arguing about this? Of course not. Having experienced the cycles of 2013, 2017, 2021, and the first half of this year, you will know that the top is not guessed by feeling, but sniffed out by data, models, and rhythm. Now Bitcoin has exploded again, and social platforms are flooding the screen. Half of the people on the internet are shouting Bitcoin. It sounds exciting, but does high heat mean it will take off? Don't forget that high heat may also be the last emotional train, and you will be dragged to pay the bill as soon as you get on the train. Is the wind coming or is it about to stop? This matter really needs to be looked at calmly.
This is kind of a historic entry point because all of the risk has been stripped off the asset. Like, you pretty much know Wall Street's going to embrace it, the U.S. government's going to embrace it, and banks in the U.S. going to embrace it, which means that all the other banks will embrace it. You already know all those things.
Brian Quinlivan, an analyst at sentiment platform Santiment, pointed out that on July 11th, the market value of Bitcoin exceeded $123,100, a 17-year high. On that day, discussions on Bitcoin on social platforms accounted for as much as 43.06%, indicating that retail investors' FOMO sentiment has increased. He reminded that high popularity is often a precursor to a market correction. Andre Dragish, head of research at Bitwise, believes that retail investors have not really entered the market yet, and the search popularity is much lower than when Trump was elected.
The market is hot, but the real retail investors have not yet entered the market. Does this sound like the fire has not yet burned the oil barrel? There are many opinions on how Bitcoin will go next. If key data such as search popularity and wallet activity are not up, it means that there are more calls in the market but not many buyers. If you look at it the other way around, this may also be a structural positive. Once retail investor sentiment is ignited, combined with the stable buying of institutions and ETFs, it may usher in a real acceleration phase. In other words, the current heat is more like the calm before the storm, not a bubble, but a critical point. So don't just look at who is shouting, "Get on board." The key is to see who hasn't gotten on board yet. In the future, once policy catalysis or on-chain data becomes more active, Bitcoin may truly enter the main battlefield of the long-short divide. Dande. As the bull market emerges, Solana can't help but get into the game again. Trends.fun, which was just launched last weekend, confused netizens. Tweets can also be turned into tokens with one click. This is not cheating, but a loophole, right? Within 2 days of its launch, the platform became a hit, and the bigwigs in the Solana circle took turns to stand on the platform, as if they were rushing to recognize their relatives. And the operator behind the scenes, Jiang Yi, is no passerby. She was once the business manager of Stepn, a partner of Multicoin Capital, and also worked in strategy at Didi. This resume can be written into a financing press release anywhere. So the question is Solana seriously pursuing a new paradigm of memes are assets, or is it another wave of issuing coins equals traffic heat harvesting war? Is this wave of operations a technological revolution or a smile harvest?
In addition to its strong background halo, Trends.fun is easy to operate. You only need to paste the tweet link on the X to issue the token with one click. The first issuer has the sole right. Each tweet can only be minted once, the cost is less than $1, and the data is transparent. At present, the market value of the hot list token is as high as nearly $1.5 million, and the number of holders is more than 8,000. The platform adopts the DBC mechanism. Without the need to build liquidity by itself, the price is determined by the market, and the publisher can also receive a 20% reward.
Trends.fun is popular, but it is hard to say how deep the water is. Let's talk about the gameplay first. It is really not complicated. Even people who can't make PPT can copy a set. You can post the tweet and issue coins in a snap. It looks like innovation, but in fact, it is not difficult for others to copy it. More importantly, these coins are not bound to the platform at all. You can trade them on the DEX outside. The platform is like a token production workshop, doing hard work for others without making money. Look at this DBC mechanism again. On the surface, it is said to be anti-brushing, but in fact it is quite hurtful. Even if your tweet goes viral, the coin price may not fly with it. When retail investors come and see that it doesn't rise, they pat their butts and leave, and the hotspot will cool down. Now the market still remembers the phenomenal hits like Pump.fun and Bonk.fun. So is Trends.fun the next paradigm, or a wave of internet celebrity traffic? If you really want to polish the two old signs of SocialFi and InfoFi, you have to be stable, supportive, and break the circle.
According to Cointelegraph, strategy founder Michael Saylor said that you have 10 years to acquire Bitcoin, and then there will be no Bitcoin left for you. To market data, today at 11:40 arrive at 12:40, more than 40 Fat Penguin NFTs were traded, of which 2 whale addresses purchased 9 and 12 NFTs respectively. Affected by this, the floor price of Fat Penguin NFT rose by 15.6% in 24 hours. OpenAI founder Sam Altman said that more than 1 million GPUs will be deployed by the end of this year, and urged the team to find a way to increase this number 100 times. According to Tether's official announcement, the market value of USDT has exceeded $160 billion, setting a historical high. The CEO said this is a critical node in the reconstruction of global financial liquidity. According to market data, the total market value of cryptocurrencies rose by 4.35% in the past week, while Bitcoin's market share fell by 5.66% in the past week.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.